Hi, welcome to Chapter 5, the accounting cycle completed. Here are the accounting cycle steps learned that we reviewed in the first learning objective. But moving on to learning objective 5.2, journalize and post journal entries. Journalizing and posting closing entries. So next period's transactions are made easier by a closing procedure. Closing is intended to close off the revenue, expense, and withdrawal accounts. Accounts have two classifications, temporary or nominal accounts and permanent real accounts. So your temporary accounts are your revenue, expense, and withdrawal accounts, and those are the ones we're going to learn how to close. It's important that you know the difference between temporary and permanent accounts. Also, the reason you do the closing is, remember, your income statement is for the period ended. So at some point, you need to reset that period and move your revenues to zero and expenses to zero to start accumulating them for a new period. So that's why we're closing them out and backing them out to zero. Okay, so recall the expanded accounting equation. Assets equals liabilities plus capital minus withdrawals plus revenues minus expenses. So assets, liabilities, and capital are known as real or permanent accounts, are carried over from one accounting period to another. Withdrawals, revenues, and expenses are called nominal or temporary accounts. Their balances are not carried over from one accounting period to another. These accounts are reset to zero for the new accounting period. This process allows for the accumulation of new data in the new accounting period. So, how to journalize the closing entries. So, step 1, clear to zero the revenue balance and transfer it to income summary. Step 2 is clear to zero the individual expense balances and transfer them to income summary. Then you actually clear the balance in income summary and transfer it to capital. And then you clear to zero the balance in withdrawals and transfer it to capital. So we'll have a picture of that in just a minute that I think will make it a little clearer. Sorry to use the same word. Okay, so here's a little picture of how we do that. We take, first we take our revenue accounts and we close them to income summary. Then we take our expense accounts, close them to income summary. So in your income summary, you're actually going to have your net income or your net loss here. And then the balance in that account, you take the difference between your debits and your credits and you close it to capital. And then you take your withdrawal account and you close that to capital as well. Okay, so here is our worksheet. And it kind of walks you through the steps. So step 1, you would close this to capital. For step 2, you would close all the expenses to capital. Step 3, you would close your capital account to income summary. And then step 4, you would close your withdrawals to income summary. Okay, so the income statement section on the worksheet, figure 5.5, shows the graphic design fees has a credit balance. So your graphic design fees is your revenue account. You're closing that revenue account, this $8,000 balance that's in the account, you're closing. So you would debit graphic design fees, $8,000, credit income summary, $8,000. So that would be your first closing entry, your first step. Okay. Our second step is you've got these expense accounts. You got office salaries expense, telephone expense, rent expense, advertising expense, and computer supplies expense, and depreciation expense. So expenses, the normal balance is a debit balance. So we're going to credit all these expenses and close those to income summary. So we have our office salaries expense. We're crediting $1,650, which is the sum of $650, $650, and $350. Then you look at the balance in the advertising expense and you credit that $250. You look at the balance in the telephone expense and you credit that $220. You look at the computer supplies expense and credit that $500. You look at the rent expense and credit that $400. And you look at depreciation expense and credit that $80. And then you debit income summary $3,100. Okay, so in your income summary account, you're left with a debit or a credit of revenue of $800, expenses of $3,100. So the next thing is to look at the difference of these accounts and transfer that to capital. Okay? So, just to recap your expenses, you do a closing entry. You close out this balance to get the account to zero. Close out telephone expense to get the account to zero. Close out rent expense to get the account to zero. Close out advertising expense to get it to zero. Computer supplies, depreciation expense. And the debit, the sum of all those credits, goes to this expense account. Okay, clear balance in income summary, net income, and transfer it to capital. So compute the ending balance of income summary account. Okay, so the ending balance is $4,900 credit. Okay, and you want to debit the income summary account to get that to zero, and then credit capital $4,900. Okay, at the end of the 3 steps, the income summary balance has to have a zero because this is just a temporary account just used for closing entries. So it'll have a zero balance if you did everything correctly. Now the next step, the last step, is to clear withdrawals. So you have a $625 balance. You want to credit $625 and debit capital $625. So here is a summary of your entry. So first step is to close revenue to income summary. Then close all the expenses to income summary. Then close income summary to the capital account. Then close the withdrawals to the capital account. Okay, next you have all your individual ledgers for all your individual accounts. So for cash account, here's our entry, and cash is a permanent entry. There were no closing entries. You have accounts receivable, computer supplies, and then all your different accounts here. Your ledger accounts are displayed there. The last one is capital, which has your closing entries down here posted to it. Withdrawals has a closing entry, and then all your income summary, the balance is zero. Your revenue account has a closing entry, and then all your expenses have closing entries. Okay, and that concludes learning objective 2.